With the equity markets exhibiting volatility and the US-China trade war ratcheting up again, we're at a pivotal moment in our economy. To help decipher these choppy waters, we're incredibly fortunate to have with us Bill Holter, a frequent contributor at Jim Sinclair's Mindset and the Gold Antitrust Action Committee. Mr. Holter is also a former Wall Street broker that forecasted the 2008 global financial crisis. And what he sees right now is shocking. China needs to attract capital to fuel its economic engine, but with global growth stagnating, they have no choice but to engage in a cutthroat zero-sum game. As such, there's no better time than the present to consider precious metals. We've outlined a protective strategy which you can find at crushthestreet.com/goldbook. History shows us that these radical changes can happen overnight. Please protect yourself and go to crushthestreet.com/goldbook. So without further ado, here's Bill Holter.
Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri. We're going to have a really interesting conversation today, a bombshell interview on what is going on in the markets, the stock markets, the volatility, the explosiveness of what Trump is doing and how it's affecting the markets, and all of it as it pertains to gold. So with me on the line is Bill Holter. He's with jsmindset.com, a collaborative effort with Jim Sinclair. And he's someone who's been an authority in the precious metal space for very many years, someone I highly respect. And we're going to talk today about what is going on in the economy. Bill Holter, thanks for coming on Crush the Street with me.
Thanks for having me.
Sir, let's start off here with the interview. President Trump tweeted this week, it was like 105 words about Chinese tariffs and, the unraveling of what was seemingly a done deal regarding these tariffs, and he rocked the market. I mean, we're off by, $1.5 trillion of market valuation just on his Twitter feed, and obviously how that trickled into the rest of the economy. So what are your thoughts here?
Well, first, you're assuming that we have free markets, which we don't. The tweet after tweet after tweet is pushing, massaging, whatever you want to call it, markets. A real trade deal, a true trade deal, will be almost impossible to do because they're so far apart, and China is going to do what's good for China. If you look at the global economic pie, it's actually stagnant, if not shrinking. I would question, how is it possible that the U.S. is growing at 3% when the rest of the world is either flat or down? The numbers that you're seeing come out of the U.S., in my opinion, are pretty bogus, and they don't add up. I mean, how can you have a robust economy if you don't have industrial production moving? You've got supposedly the consumer is extremely strong, but at the same time, you've got car sales down, you've got credit card charge-offs, write-downs expanding greatly. I mean, to me, it looks like we're in 2007, 2008 all over again.
So let's discuss it then with how well or not well the Fed and the people in charge have managed this whole mess up until now. Obviously, we've had this historically long bull market in equities, and Trump is telling the market, with his Twitter account once again, telling the Fed how he wants low interest rates, how we need this loose monetary policy. It's unfair that Obama had this loose monetary policy while
Oh,
things are
yeah.
getting tightened during his presidency. Obviously, President Trump and candidate Trump were almost two different people. And then, even at the end of 2018, we saw as interest rates started to rise, the economy started to, get weak. And we saw some water falling through the cracks, if you will, with the stock market getting volatile. Gold was starting to get really exciting. And then they started managing it once again. So how well have they managed this whole mess, in your opinion?
I would start by asking why, if the economy is growing at 3+%, unemployment's at levels back to 1969, why does the Fed have to cut rates? And at this point, the odds based on the futures, the odds look like over 100% quarter point rate hike and possibly a 50 basis point rate hike. Simply since 2008, 2009, the Fed has operated under emergency measures. Never did you hear the word expansion. All you've heard since 2008, 2009 is recovery, recovery, recovery. And interestingly, if you look at industrial production, those numbers, I think we're still, 3 or 5% lower than we were back in 2009. That's not an expansion.
So, Bill, one thing I would ask you then, you called it the economic pie, where we are and, the global economic pie.
Right.
Is there any way for the U.S., and again, at the expense of other countries' piece of the pie, to attract capital into the country at a rate that would fundamentally backfill all of the problems, all of the debt, all of the loose monetary policies that's artificially sustained the situation by attracting so much capital from around the world at the expense of other countries' piece of the pie?
Well, that's an interesting concept, but the pie is the pie. And if one party attracts it, it's got to be lost from someone else. And this has become such an economic / financial orgy that what will happen is if one party attracts capital, it will kill another party. Now, interestingly, China, since I think 2017, late 2017, has no longer been a net exporter of capital. China, if you will, looks very much like the United States looked in 1928, 1929. They need to attract capital at this point. And again, the pie is only the pie. It's no bigger than what that total is. So now what you've got competition trying to attract capital, and that's the reason for your trade tariffs. That's the reason for your trade war.
Right. So let's discuss gold here. We've seen gold in basically this bear market since 2011. And for anyone who's going to attack me right now.
On that. It was a bear market from 2011 to 2015. If you look at the bottom, I think it was August, September in 2015.
Yeah,
we're up more than 20%. So there's your definition of a bull market. This is a bull market that's just getting started, but being retarded and caused initially by paper contracts being sold onto the market. This is not real gold that's hitting the market.
Right. And just about right before that, I was about to clarify and just say, since 2015, December of 2015, where we bottomed out, we've had these spikes up in gold, these very fast spikes up in gold. And it reminds me of, these stats where if you miss like 10 days in the stock market over the course of the year, you have like a negative return over, like these crazy things, for these compound interest calculators. in regards to investing in the S&P 500. But gold has seen these very quick spikes up beyond 1,300, and then they slowly trickle back down. And unfortunately, many people wait to get in, when they see that exuberance, they see that confidence, start to enter gold and say, hey, here we go. We're going to 1,500. They get in at 1,350, only to again be washed and rinsed by gold going back under 1,300 once again. And this has happened a couple times. And that was what I meant by the feeling of a bear market. It hasn't felt like a bull market,
Right.
as opposed to maybe like what we've seen in Bitcoin, where, things turn around and it actually feels like it's turned around because it starts to trend higher in a very material way. So, what are your thoughts on that?
Well, again, you're assuming that the gold market is a freely traded market, and you get these spikes, and yes, they cap it, and then you see it drop over the next few weeks, and it's back under 1,300 again. Again, that is done with paper gold. It is a managed market. Whether you bought at 1150, 1250, 1350, it doesn't matter, because when this game ends, you're talking about numbers not thought of at this point. Gold versus paper currencies. So yeah, it's frustrating. But for somebody to buy at 1350, and you use the term, rinse, so it goes back down to 1280, 1290. Who cares? You're only talking 4 or 5%. The bottom line is you have to be in place when they lose control. And when they lose control, asset prices across the board are going to become unrecognizable.
Right. Yeah, no, it definitely can be a frustrating thing. So, what are your thoughts then, or your advice for people who have been in the precious metal space and, they're just getting tired. They're getting tired of waiting and maybe on the verge of selling their gold for another asset class. Is that I would assume that you think that's a major risk for people because they're going to miss out on what is to come. Or is it possible that they continue to control the paper markets for an indefinite period of time, and we really never have a freely traded gold market that reflects the true price of what gold should be?
Well, the second part of your question, that cannot happen. It can't go on indefinitely, because there's something called delivery. And when you're talking big capital, they want the metal delivered. And we'll get to the point where the metal does not exist to deliver. So there will be a failure to deliver, and then you'll see chaos.
And then at that point, we see gold go up. It reflects the price it should
Well, you'll
be.
see chaos. You'll see interest rates at much higher levels, which means bond prices have collapsed. You'll see stock prices probably get hit very, very hard. And you may see stocks turn around and start going to the moon based on hyperinflation, because that's how this ends.
So what do you feel gold should be valued at the current environment? I know Jim Rickards has a $10,000 analysis based on the money supply. And, if we had a certain amount of backing of gold with the money that's out there, the fiat money, and that makes a whole lot of sense. And, I guess to a certain degree, it doesn't really matter if it's officially backed or not, because gold is money. And I feel like that's what people are going to hold on to, and gold will reflect that regardless of whether it's officially correlated or not. So he has a $10,000 price target. What is your thoughts on gold?
Well, first off, you can't put a number on it. Going back to your previous question, I did want to mention there has been very large retail selling in the United States over the last 3 to 6 months. And that's the reason that premiums across the board have dropped, is because U.S. Gold and silver holders have been net sellers. As far as a future gold price, if you just take the $21 trillion debt that we have, and obviously that number is probably much, much bigger. It's probably closer to 200 trillion when you talk all of the loan guarantees, backing, et cetera, that the Treasury has. But just use that $21 trillion worth of debt divided by the 8,300 tons that we supposedly have, but there's not been an audit since 1956. So if you do that math, you come up with over $80,000 an ounce.
Wow.
And that's just with current debt. That's not with the ongoing debt that's being piled up. And that's with the assumption that, yes, in fact, we do have 8,300 tons, which I highly doubt. If we did, there would have been an audit to show that.
Right. Well, that's powerful. Bill, please share some closing thoughts here on this interview. I really appreciate your time here with us at Crush the Street. Thoughts on, where we are in the stock market, where we are in gold, and kind of how people, or how you're positioned here as we go into 2019, and closing out the year, where things are headed.
Well, I believe we're headed, mathematically, we're headed for total chaos because the debt globally can't be paid off. So there has to be some type of reset. There has to be some type of currency / debt reset, and it'll be looked at as a currency credit crisis. You need to be in your position, whatever position you believe you should be in, you need to be in that position before the wheels come off these markets, because once that happens, you're not going to be able to change where you are. So if you believe that you should have a good allocation in precious metals, that's where you should be right now as we speak, because tomorrow morning you might not be able to do that. We'll get to the point where this will happen, and people are going to want gold and silver, but it's simply not going to be available for purchase and be delivered on. And that's just from a financial standpoint. I would urge people to take the mindset that you're going to be on your own for, I don't know, a couple weeks, a couple months, 6 months. I don't know how long, but the system is going to break. And when it does, you're going to be on your own, which means you don't get to make that trip to Walmart to get tonight's dinner. You better have the next 2 or 3 months breakfast, lunch, and dinner. You better be able to purify your own water. It would be a good idea to have some type of alternative electricity source. I would plan for the worst and hope for the best.
Well said. Plan for the worst, hope for the best. Bill Holter. Bill, if people want to learn more about the things that you do, the content that you create, and the services you provide, please let them know where they can go and what they can expect to find.
Well, you can go to www.jsmindset.com. It's a 2-tier website. We have a free side where we put articles of interest up, and we put our comments to that. I write a couple articles each week, and we do a round robin of, there's 4 of us that do an interview, recorded interview for subscribers once a week. It's about an hour long, and that's for subscribers. The subscription costs $129 for a year. So really what you're doing is you're getting 2 articles a week that I write, and you get basically 52 one-hour seminars, if you will.
It's powerful. Well, Bill, thank you again for coming on Crush the Street. And again, I appreciate your time, especially once we start to see that unraveling of the system. I want to have you back on to do an update. So, looking forward to see how 2019 ultimately plays out here as we, go deeper into the tooth of this 10-year-long historic bull market in equities, and how the transfer of wealth ultimately plays out here. And I think it's going to be a fireworks show. So again, thanks so much for coming on the show.
Thank you.